Welcome back, my friends. Today, we have a pressing topic that's been making headlines globally. China's imminent financial crisis, triggered by the Zhongzhi Enterprise Group's default. What we're about to discuss isn't just about one company's struggle. It's about the possibility of a contagious cascade effect that could ripple through financial markets on a global scale. Zhongzhi Enterprise Group is in the midst of a financial storm, and it's raising concerns about a potential financial domino effect, sending shockwaves through markets worldwide. The fate of Zhongzhi Enterprise Group, with its massive 1 trillion yuan asset portfolio, is now being closely watched by investors, analysts, and governments alike, because its default could be the tipping point that pushes the world into an economic whirlwind. The big question in everyone's mind is whether this will trigger a crisis reminiscent of the infamous Lan Brothers collapse in 2008. But before we delve deeper into this financial turmoil and its potential global consequences, make sure to subscribe to this new channel to see more videos about economy and interesting economic facts from around the world. So without further ado, let's start. First things first, let's talk about Zhongzhi, often referred to as China's Blackstone Group due to its size and economic relevance. Zhongzhi is a major Chinese asset management group known for its significant presence in the financial sector, with an extensive asset portfolio estimated at around 1 trillion yuan, or approximately $137 billion. Zhongzhi holds a prominent position in China's financial landscape. Similar to Blackstone Group in the United States, Zhongzhi plays a crucial role in managing and investing funds across various sectors, including real estate, commodities, equities, and bonds. Its size and influence have made it a key player in the Chinese financial industry, closely watched by investors, regulators, and politicians. As we delve into the unfolding situation surrounding Zhongzhi's financial challenges, it's essential to understand its significance in the context of China's economy and the potential ripple effects it may trigger globally. So stay tuned to grasp the full implications of this critical development. Recently, Zhongzhi held an investor meeting, and what they had to say sent shockwaves through the financial world. In this pivotal gathering, Zhongzhi openly addressed its financial predicament, which had been shrouded in uncertainty and speculation. During the meeting, Zhongzhi made a startling revelation. The company is in dire need of a comprehensive debt restructuring. This admission carries profound implications, not just for Zhongzhi, but for the broader financial landscape. It signifies that one of China's colossal asset management groups, managing assets worth approximately $137 billion, is grappling with severe liquidity challenges. Furthermore, Zhongzhi disclosed that it has halted payments to investors in all its investment products. This alarming decision suggests that the company's financial troubles are far-reaching and have now directly impacted its stakeholders. As we delve deeper into the repercussions of this revelation, it becomes evident that the financial turbulence surrounding Zhongzhi is not an isolated incident. Instead, it could potentially set off a chain reaction, affecting not only the company itself, but also casting a shadow of uncertainty over China's financial sector and, by extension, the global economy. The Chinese property market is currently in the throes of an unprecedented crisis, characterized by mounting challenges and financial turmoil. Notably, major industry players such as Evergrande and Country Garden, once giants in the field, are now grappling with financial woes that threaten their stability. Evergrande, for instance, defaulted on its debts in late 2021 and recently filed for bankruptcy, while Country Garden, once China's largest private property developer, is mired in a severe liquidity crunch amid plummeting sales. In this already precarious environment, Zhongzhi's financial difficulties have only exacerbated the situation. Confidence in the Chinese markets have been wavering, and the repercussions are becoming evident. Prices of many Chinese stocks and corporate bonds have been tumbling, with Hong Kong's Hang Seng Index even entering bear market territory after a 20% decline from its recent peak. The unfolding situation involving Zhongzhi's enterprise group has become a focal point for both financial analysts and individual investors, sparking heightened anxiety and concerns. Among the most alarming development are reports from individual retail investors who have not received the payments promised to them from Zhongrong products. This non-payment has prompted these investors to take their grievances to local authorities in the hopes of seeking redress and answers. The significance of this lies in the potential ripple effect throughout China's financial sector. Trusts like Zhongzhi are pivotal players in the country's financial markets, with their investment products widely utilized by both individual and institutional investors. If these trusts are unable to fulfill their financial obligations, it could undermine confidence in the broader financial system. These events underscore the increasing fragility and challenges facing China's financial landscape, and they serve as a bellwether for potential spillover risks that could impact not only domestic but also global markets. Zhongzhi's enterprise group's unique challenge lies in its opacity and enigmatic nature within the financial world, often likened to a black box. Zhongzhi operates with a high degree of secrecy and minimal transparency, making it a particularly challenging entity for investors to decipher. Unlike publicly traded companies that are required to disclose financial information regularly, Zhongzhi, as a private entity, does not have the same level of reporting obligations. The lack of disclosure means that investors, both individual and institutional, have limited visibility into the specifics of Zhongzhi's investment portfolio and financial health. As a result, they are left in the dark regarding the nature and quality of assets in which they're invested. This opacity becomes especially concerning during times of financial stress and uncertainty, such as the current situation with missed payments in a broader economic downturn. Investors find themselves grappling with significant uncertainty as they're unable to ascertain the full extent of Zhongzhi's exposure to risk, which could potentially impact their investments and financial stability. In an environment where trust and transparency are crucial, Zhongzhi's secretive operations have further heightened anxieties and underscored the challenges of navigating China's complex financial landscape. The looming question that has gripped financial markets and experts worldwide is whether Zhongzhi's current financial turmoil has the potential to trigger a systematic contagion-style collapse in China's financial sector, reminiscent of the catastrophic Lan Brothers moment during the 2008 global financial crisis. The comparison to Lan Brothers is significant due to the profound impact it had on the global economy. When Lan Brothers filed for bankruptcy in 2008, it sent shockwaves throughout the financial system, leading to a cascading effect of panic, distrust, and widespread instability. Banks froze, credit markets seized up, and the world plunged into a severe economic downturn. Similarly, Zhongzhi's troubles have raised concerns about contagion risks. The company operates within China's shadow banking sector, an intricate web of financial institutions that operate outside the traditional banking system. These institutions often have intricate connections with various sectors of the economy, including real estate and wealth management. If Zhongzhi's woes escalate and trigger a chain reaction of defaults or loss of confidence in other shadow banking entities, it could lead to a loss of faith in the broader financial system. Investors may start withdrawing their investments, leading to a credit crunch, reduced lending, and economic turmoil. While analysts suggest that the Chinese government is better equipped to handle such a crisis today than during the Lan Brothers collapse, the potential for widespread disruption remains a matter of great concern and scrutiny. Well, let's address that concern. Citigroup suggests that while more trust fund defaults may occur due to exposure to the property sector downturn, a Lehman moment is unlikely. They argue that investors have been mentally preparing for potential defaults, especially given the ongoing challenges in the Chinese property development sector. Still, this isn't a Chinese problem. As we have seen in the past, financial crisis in one part of the world can have far-reaching effects. Foreign direct investment in China has plummeted. Hedge funds focused on China are shrinking, and the global economy is closely watching the situation unfold. To put it simply, this isn't a crisis confined within China's borders. It's a global concern, and financial markets worldwide are holding their breath, waiting to see how the story unfolds. In conclusion, the unfolding crisis surrounding Zhongzhi's enterprise group, often referred to as China's Blackstone, has far-reaching implications that extend beyond the borders of China. This isn't merely a struggle faced by one financial giant. It's a situation that could trigger a contagious cascade effect with potential global repercussions. In the context of China's already fragile property market and the struggles of industry giants like Evergrande and Country Garden, Zhongzhi's woes add another layer of complexity to an already precarious economic landscape. Now, the big question looming over financial markets worldwide is, when will Zhongzhi's group collapse? Well, now that you know more about the Zhongzhi's enterprise group's imminent collapse and its future implications to the global economy, don't forget to like the video and subscribe to our channel to see new videos about economy and interesting economic facts from around the world. And don't forget to turn on that notification bell. And we'll see you in the next one. Until next time, goodbye.